The economic outlook is bright in the Americas, in Europe, and in Asia. It's bright because of global trade, it's bright because of investment spending, and consumer confidence is high across the board. That's good for the Eurozone, where growth is going to be much higher than potential in 2018, as it was in 2017. The one economy where we see growth still being constrained by worries is the United Kingdom, where we don't expect more than 1.6% growth in GDP in 2018.
You mentioned that global trade was slowing down. How does that bode for the UK that's looking to strike those trade deals outside the Eurozone? And also, how effective will the transition period be in acting as a buffer for UK businesses?
First thing, the UK is a very open economy anyway, so good global growth is good for the UK. However, the time it will take to negotiate independent trade deals outside of the framework of the European Union means that the UK will not fully benefit from the pickup we see in global trade in coming years. The other part of the question is the transition period. And unfortunately, a 2-year transition, when we're already well into the negotiation phase for Brexit, is not sufficient for businesses to make the capital expenditure in the UK economy that they might have otherwise. Other economies will benefit more than the UK.
Perhaps not such good news, the sterling-euro rate, you're looking at almost parity by the end of the year.
That's right. The environment we see is one of a weakening dollar against the euro, and we're expecting sterling to weaken against the dollar, which gives quite a bit of downside for sterling against the euro. Parity is possible on a 12 to 18-month horizon. The impact of Brexit uncertainty, we think, will be reflected via a weaker exchange rate, which will help the UK economy garner some competitive advantage compared to where we are today.
Gibraltar's GDP growth has been consistently strong over the years, but do you see this slowing down now in line with the UK?
No, we think the growth drivers for Gibraltar are very different from those of the UK economy, given the specificities of business environment here in Gibraltar. So we'd be more optimistic for Gibraltar than for the UK as a whole.
Gibraltar's recently introduced its DLT regulatory framework. It's attracting fintech companies from all over the world, and Gibraltar is looking to lead the way in this area. Do you see this as a key economic driver as we leave the EU?
We're excited about the potential for blockchain-type technology, DLT, but we do see one constraint, which is electricity consumption, which is far too high compared to the economic benefit of using DLT. So technology has to improve for the growth potential of DLT to be fully realized.
Well, 2017 was a good year for cryptocurrencies. 2018, not such a good start so far. There's been a sharp decline. Where do you see cryptocurrency going this year in terms of its position in global finance?
Cryptocurrencies we view as a tool for speculation rather than investment. We caution clients to be careful of the amount of capital committed to this area, because they are impossible to value by any reasonable metric. And what we can't value, we find very difficult to invest in.